Hey everybody, it's your old pal Brian Hunt. Welcome to another episode of 60 Seconds of Risk. And today's episode I want to address sort of the concerns some people might have over the past couple of weeks or month is whether or not there's any concern about the banking system, whether there be more failures that's going to occur, and how your money might be impacted. Just so you know, in the United States, if your money is at a bank or savings and loans, or certain guaranteed institutions in the United States, your money is insured up to $250,000 by the FDIC. Now this $250,000 is per individual in total. Let me give an example. At an institution, let's say you've got a couple of different accounts sitting at a bank. You've got a checking account, savings account, money market account, and some CDs. And if the total amount is less than $250,000, you've got coverage. However, if you have money in excess of $250,000 across all your accounts at one bank, you only get $250,000. Now, one thing you might want to think about if you're married, you and your spouse, let's say you have two separate checking accounts. One's got $200,000 in it. The other person's got, say, $400,000 in it, okay? In that situation, the person with $200,000 is covered up to the full amount of your $200,000. But if you have $400,000 in the account, you're only covered up to $250,000. Now, if the two of you had a joint account and you both owned it 50%, you actually have $500,000 of coverage. So 250 plus 250 gets you $500,000. So that would be a way to increase your insurance coverage at your banks. Now, the thing to remember here is for the FDIC, it covers cash accounts, checking, savings, CDs, self-directed IRAs, if it's strictly for the purpose of putting into a cash account, not for stocks. It does not cover stocks, bonds, gold, commodities, and it sure as hell doesn't cover Bitcoin. So remember, in the event of a bank failure, you've got coverage up to $250,000 per individual, per institution. So we've talked about in the past about the power of diversification. Don't put all your eggs in one basket. If you're concerned you might lose all your money, use multiple banks to spread your assets across so that if one goes down, more than likely the other institution is not going to fall. Again, hope you've found this beneficial. If there's a certain topic or individual you want to see on these posts, please put a note on LinkedIn. You can also subscribe to my YouTube channel, and you can find the links on Twitter. Until next time.